Today we're sitting down with someone who's seen Salad House from every angle. From running its books to helping them grow for almost a decade, Frank is now also a franchise owner and a CFO.
I would say the first and most obvious thing is the executive team, but behind that is a brand that appeals to everyone.
It's like 50% of the people are a loyalty member. That's unheard of.
I mean, I keep putting numbers together and I'm seeing great unit economics with respect to sales and prime cost and return on investment. From the time that we closed on that business, we opened 4 weeks later. And over the first 12 months, we are already at our AUV practically for the brand.
If you're talking to somebody, they're on the fence considering maybe becoming a Salad House franchisee, maybe not, what would you tell them? Hey everyone, today we're sitting down with someone who's seen Salad House from every angle. From running its books to helping them grow for almost a decade, Frank is now also a franchise owner and a CFO. So Frank, welcome. Excited to dive into your experience.
Thanks, Bennett. Thank you.
How did you get introduced to Salad House and what made you want to start working with them?
Well, I've been self-employed for 20 years, working in accounting and hospitality exclusively. I had some friends that introduced me to Jerry originally, and I knew Tim, one of the other partners, from right after college. So once they opened up the Westfield location, we started to work together and providing advice and some accounting services and trying to figure out how to create something that was very small at the time with a lot of passion and turn it into something that we could all make money doing.
I love that. What's the differences that you've seen with Salad House? Because you have a unique angle, right? You've worked with other companies and you've seen their numbers. You're
Yeah.
you're in the hospitality. What's attractive about Salad House, or what's different that there's 4,000 brands. You could have obviously invested in other franchise brands that you probably do accounting for. What makes Salad House different from the finance side?
I would say the first and most obvious thing is the team, the executive team. We've got a group of people who really understand their role. They stay in their lane of expertise. We collaborate together. But behind that is a brand that appeals to everyone. That whole concept of being able to serve as many people as you can and not having a group of people or a member of your family, not, trying to eliminate
Mhm.
it from the rotation is fantastic.
I came from a cookie company that I didn't love the fact that I was selling cookies, because it's just like it's a cool comfort food, but it's not super healthy. Where a
Yeah.
Salad House, you're offering really good options, but also healthy options. Talk to me a little bit about the variety of the menu and how that is helping your guys' success.
I mean, we're as an executive team, we're all pretty health conscious. So I think that we tend to order more salads than sandwiches, or fries for that matter. But my kids, for example, they don't. They want the sandwiches and the fries. So it's interesting, because no matter where you are or what mood you're in or what day of the week it is, time of day, you can always find something that is going to satisfy all the people that you're trying to feed.
And I think this is why is a really cool metric that I've seen with Salad House is your retention rate or your loyalty rate. It's like 50% of the people are a loyalty member. That's unheard of. Usually it's like 1 in 8 customers. But it makes sense when it's like, okay, I could come every day because I'm gonna get a salad, then a wrap, then a smoothie, then a sandwich, some French fries, and then next week rinse and repeat. And then you have that really good customer base that's extremely loyal. Um, can you talk to me about is there anything else, or I guess what else are you guys doing to achieve such high loyalty members? I've never heard of such high rates really anywhere in the industry.
Well, we spent a lot of time building out the loyalty program. So we looked at it from a variety of different lenses. One was just to ensure that our guests are satisfied with what they're getting back from spending, but also financially, we're calculating how much the rewards are going to equate to at the franchisee level, and ensuring that our cost of goods sold is still in line despite all of the givebacks, and adjusting our pricing to modify things so that we can still hit our financial profitability metrics.
I love it. Talk to me about advice on, I mean, again, CFO numbers guy. How do I, as a franchisee, how do I keep my numbers in line, whether it be any advice you have on labor and or cost of goods to run a tight ship?
Well, those are the drivers, right? So the combination of your labor and your cost of goods sold are referred to as your prime cost. And if you started your own salad concept, that's one of the pitfalls. You have to create all that. So in exchange for this franchise concept, we're telling you, hey, look, here's a proven model. But if you're operating the store and those numbers aren't in line, then that's where you can fall short of the expectation. So those operators that are doing the best are the ones that are in tune with their prime costs every week, making modifications and staying on top when adjustments are needed to put those in place so that they can continue to be profitable.
What did you see as a CFO that pushed you over the edge to say, "Yeah, I do wanna become a franchisee"?
I mean, I keep, putting numbers together and I'm seeing, great unit economics with respect to sales and prime cost and return on investment. And really, I was just waiting for an opportunity that was convenient geographically for me to take that step forward.
And then that was the Westwood store which opened up about a year ago.
Yeah, just about a year ago.
Awesome. How was that process? How long did it take you to open it up? How much did it cost you? Were you under budget, over budget? And how well did it do its first year?
Westwood was unique because we purchased a pre-existing business, completely different concept. So we paid a sum of money for that business, and then we had another smaller sum that we needed to convert it to the salad house concept. We were right on budget, right in the middle sweet spot of our range in terms of build out costs. But one of the most unique aspects was from the time that we closed on that business, we opened 4 weeks later. So that's certainly not the norm, but it was a great way for us to kind of get up and running. And over the first 12 months, we are already at our AUV practically for the brand.
That's awesome. So costing 5 to 600,000, like you guys were on budget. You saved months though on opening because it was only 4 weeks, but
Yes,
usually it's going to be 8 months to 12 months, right? Depending on a
for
few
sure.
factors to set better expectations. And then hitting AUV's average unit volume. So Salad House's average unit volume is 1.6 million. So that's what we're referring to here. Hitting AUVs at first year was awesome. What did you do from a marketing standpoint to help you achieve that?
Well, there's a valuable spend pre-opening that I think that all the fastest growing stores will invest in. And really, Salad House is such a community brand and a family brand that if we focus on supporting the community by way of events, local schools, things like that. Also, in that specific community, there's a lot of other businesses and a lot of other places that we can do some food drops and get more awareness of the brand and kind of have the local businesses also support us. So if you're situated in a downtown like we are, where people who frequent that downtown also live there, you can get a lot of repeat business.
And how much of that do I need to do as far as like figuring out the process and where to market and who to go to versus what was provided by Salad House Corporate?
Well, from the pre-opening expense, we will give you somewhat of a handbook, a guideline on what we think that you should spend money on. So that's pretty much set in stone. And then as you open, we'll give you advice as we track your sales on when and where we need to inject some additional dollars potentially. Some stores open well above AUV from the first week, and there's been other stores that open a little slower, but ultimately we want to continue to accelerate that process to get to the AUV as fast as possible, because a lot of times, especially in those first few months that you open, you have a period of free time from your landlord. So that's a time to try to recoup a lot of the money that you spent and kind of bank some and figure it out, reinvest a bit so that you can look to a brighter future.
Frank, from your perspective, either from your journey or just what you've seen other franchisees go through, what are the costs that are most often underestimated?
The two things that come to mind would be the build out process, depending on the town. You can submit all the paperwork and get everything in place, and then some of these towns they take a really long time to get the documents pushed through. But when you sign your lease, that rent is coming based on that the process that you signed up for. So oftentimes you can be in a situation where now you have to outlay some cash for rent and utilities and so on and so forth, maybe some insurance even for an extended period of months that you didn't originally anticipate. And then once you open, the other major thing would be, sometimes a store just opens a little less than you expected with respect to sales. So when that happens, you should really have some additional availability for working capital to weather that storm so you can reinvest with some additional marketing dollars, reach out to the community some more, and give yourself the time that you need to ramp up and get to break even.
So really having it done correctly, there's so much benefit of opening up the store fast. Like you mentioned your 4 weeks and you're like, "Well,
Yeah,
cool, that saved me 8 months of time."
of
It's way
course.
more than 8 months of time. It's
Yeah,
8
yeah.
months of revenue. It's 8 months of
Right.
profit. It's 8 months of
Right.
less of those
Right.
expenses. So you've seen working in the hospitality, you've seen so many different books and different operators. Um, what's separating the good operators from the great ones?
I think our operators, for the most part, are hands-on. But I think operators that tend to spend more time in the store, more time with their staff, more time supporting that community, those are the ones that are typically in tune with their sales trends. Those are the ones that are on top of their cost of goods sold. They're on top of their labor. So when an operator is informed, timely, and willing to get in and make the changes that are needed, those are the ones that then can turn around in short period of time and go from one location to 3 or 4 because they're just reinvesting those funds, and that first store is now paying for the second, the first 2 are paying for the third, the first 3 then are paying for the fourth, so it just becomes this snowball. And also unit economics improving because when you have a manager in one location and then there's a geographically a convenient second location. Now you can give that manager a little boost in pay, but split it between the 2 stores, and somehow both stores now are more profitable. And you just continue that trend.
So you own a store. Um, you're also the CFO, you run businesses. How do you manage it all? Um, and what's the recommendation for someone maybe like me to come in like, I'm gonna be in this full time. I know I need to figure it out, but eventually, how do I free up my time to then open up stores number 2, 3, and 4 without,
Yeah.
working those 12-hour days?
Yeah, that's a great question. I think that anyone that comes into this brand or any brand for that matter needs to spend and invest initial time in the store. You have to understand operations. It's really hard to manage a team of people and, advise them on what to do when you don't understand yourself. So once you get that familiarity with the way that things work day to day and you can educate a manager and explain to them exactly how things need to work, then you can kind of start to step away, give that manager a little more incentive, a little more responsibility, and feel comfortable. Unfortunately, you might hire someone that you think is there, and then you find out as soon as you start to step away, maybe that's not the right fit. But if you're in tune with those numbers every week, those things become apparent very quickly. Your cost of goods sold start rising, your labor starts rising. You're trying to problem solve these types of situations, and when they keep lingering, maybe it's time just to make a change with that person.
Find the right person.
Yeah,
Start stepping back, monitor your numbers. If they're good, then keep stepping back. If not, but again, I mean, you could tell your background on it, right? You're the CFO. You're like,
yeah,
monitor the numbers, and then
right,
those are your key indicators there.
right.
Um, okay, so a lot of people watching this video won't have food or hospitality experience. What do you tell them? I mean, is this something that's too hard to do if you don't have the food or hospitality experience, or it is as long as you have business experience? What's that advice?
I don't think it's too hard. I just think, some people might come into it and underestimate what's required. This is not the kind of industry where you do a lot of delegating initially. This is the kind of industry where you get your hands dirty, and you need to be in and understanding. You need to be front facing with your guests. They need to understand that you're the owner and see you and be familiar with who you are. Um, Managing people is a whole nother thing. Leading from the front and setting an example for what work ethic is and those types of things. There's a lot of people that are working in your store that are looking to you as the owner for guidance and growth in the organization that you created.
What are the pros and cons that you've seen being a corporate owner as well as a franchisee?
Yeah, typical franchisors are concerned with top line revenue because that's how they get paid. So they want more guests, they want more sales, they want them to buy more things, but they're not concerned with the net income, the bottom line, because that's the franchisee's portion. But we look at things from both lenses. We want top line revenue, but as a function of net income. So before we put anything out into the ethos and with respect to making changes to the company, we're always analyzing what impact it has on the bottom line and whether or not it's worth it. There are companies that make a lot of gut decisions day to day, but we're a very data driven company. We're mining data each and every week, and when there's a menu change, it's not because somebody just loves the product or doesn't love it. We want to know what everyone is thinking about it. So all those decisions are made with hard data, and sometimes they're decisions that you're not a fan of, but it's better for the brand.
What has been your favorite part about being a Salad House franchisee?
The franchisee process has been awesome. It's like, especially in my seat, I'm able to see things from the corporate side. And when you get into the granular details and you make changes to a price or to a product or negotiate with a vendor to bring something down or a third party delivery service fee, it immediately shows up in your bottom line. So it's that ripple effect is real, and we're all trying to make the most money we can while we continue to serve the community that we're in.
Last question for you. If you're talking to somebody, they're on the fence considering maybe becoming a Salad House franchisee, maybe not, what would you tell them?
I would tell them not only to look at the numbers. I mean, this might be contradictory to what a CFO might say, but I would certainly really assess the people that you're getting involved with. I believe in the team that we have, and I think that we do a great job of actually, showing franchisees from inception that we're real people, that we're on the front lines with them, that we care about the brand, that we care about them, because ultimately we're all in the same ship. And when you're a franchisee and things are not going so well, you need that support. So the work ethic that we put forth, the dedication that we have to the brand, we really want people who are like-minded in that respect.
Frank, well, I appreciate your time. Thank you for sharing your experience and congrats on everything you've built so far with Salad House.
Thanks, Bennett. Appreciate it.